So in today's session, I'm going to be telling you all about how I made 62K on a property trade in less than 2 months. Stay tuned for that. I'm going to be telling you all about how property trading really works and how you can be in and out of deal similar to my deal in 60 days. So my name is Saif Derzi. I've been a property trader for over a decade now. I've completed over 600 property trades and I have won Property Trader of the Year back in 2022 in the Property Investor Awards. I'll be covering everything about the property trading cycle. This Zoom was originally for our property trading community, but I just thought the value was too good not to share it with you guys. Stay tuned, you are in for a treat today. I'm going to be talking to you guys all about finding deals and auction arbitrage, okay? So I'm your host for today, Saif Derzi. You also have probably known Piotr and Jay, who have joined me on the Property Trading Academy. So we are basically hosting this as a trio. So lucky for you guys, you get the three of us. But yeah, so today's all about property auction arbitrage, which I think a lot of people have been getting more familiar with within sort of recent years as well. And it's something that I want to kind of lift the lid on a bit, talk a bit more so you can obviously understand it. So really it's for you guys, how can you start to look at trading properties in a few weeks rather than maybe flipping properties, which takes months, developing properties, which takes maybe sometimes years as well. So if you're not wanting to deal with tenants, obviously builders, mortgages, that's what this is aimed at, is people that just want to be able to trade properties pretty quickly without having to deal with all of that. Okay. So from my point of view, in terms of property trading, it's all about speed and profit margin. You don't want to obviously have, long-term holds. You want to be able to build a cash pot really, really quickly. And you basically want to be able to create the profits without hassle of refurbs, build teams, etc. Okay. Without the development angle. So if that's what you want, if that's what you're interested in, then I think property trading is definitely for you. And this webinar is definitely for you as well. It's not for people that just want to basically build a portfolio, be landlords forever. It's not for people that want complex development projects. It's also not for people that want sort of long timelines where they're using finance and developing properties. It is very much speed and certainty, as we talk about a lot from a property trading point of view. Okay, so a bit about me and my sort of journey in property. So I am a pharmacist turned property trader. I've been in property nearly 9 years now. I've completed about 600 trades in that time. So that's buying and selling. I won Property Trader of the Year back in 2022 at the Property Investor Awards. And I founded a property cash buying company called Property Buyers Today. So that's where we do a lot of the buying and selling of properties. Okay. So today's agenda, we're going to be talking a bit about the trading ecosystem and deal flow, which I think is quite important. We're also going to talk about auction arbitrage and how to turn inefficiencies into profit. I'm going to give you a real case study, and then we're going to do a Q&A and an invitation as well to the Property Trading Academy. Okay, so that's the agenda for today. So a bit about the trading ecosystem, I suppose. So what you're looking to create is a short cycle. So that short cycle is being able to buy a property and sell a property, ideally within 3 months, but maximum within 6 months. Okay. So when you're trading, it is all about cash flow. Cash flow is super, super important. And the reason that is because you want to be able to get your money in and then get your money back out and get deployed again. Okay. And with that means that you've got to obviously have your deal flow. So deal flow and cash flow work hand in hand. Okay. What you don't want is loads of deals and not enough cash. And also you don't want the vice versa of that either. You don't want loads of deals. You don't want loads of cash and not enough deals. And very much trading is like that. You're going to have to be balancing deals and cash at any one time. Okay. So that's really, really important for you guys to understand that cycle and the cash flow that comes with it. Now, obviously there's lots of different things that can be done to mitigate that, which I'll talk about at the end. But generally speaking, it's a very short cycle. Okay. 3 to 6 months. And typically you don't do any refurbs. So on some property trades, to be honest with you, you can have properties where you do for example, you might whitewash the property. So that's typical sometimes of a trade where sometimes people will take a house that basically has been run down, whitewash it, and then re-enter it into auction, or maybe take off boardings from windows, maybe put a window in, put a door in, etc., and retrade it. But generally speaking, there's no refurbishment and definitely no heavy refurbishment either. Focus is always speed and margin, really, really key. So what you want to try and balance is you want to be able to make a margin, but at the same time, you don't want to hold on too long to that property. So it's really important. You've got to try and understand what's the best way for you to be able to exit that deal. If it is about speed, then obviously you go down the auction route, you try and get rid of it, you try and sell it, you move on. that probably isn't going to be the biggest profit margin, but obviously if you do volume, it starts to make sense and it works quite well. Really important as you're building an ecosystem and you want to be in this ecosystem is working with other people. So believe it or not, a lot of the people trade together. I trade with other people that are traders, whether they bring a deal to me that whatever reason they don't want to take the risk on, don't have the cash to do it, don't have the appetite to do it. We will do that deal together. And vice versa. I've had lots of people that I've trained up over the years that have basically brought us deals. And again, for various reasons, they haven't had the cash to do the deal. We've done the deal. We've paid them from that as well. And that's been a pretty successful profit margin. One of the people we've recently been dealing with, I trained him up last year. It was end of last year, beginning of this year. And we've done about 7 deals so far already. So really important, you try and work within an ecosystem with others and you want to help each other. A lot of it is about trying to obviously learn from other people's deals as well as your own deals. But the learning side of things is really, really key. And as you pick up different deals, you'll get different bits of experience and then you'll be better at buying as well. Okay. So that's a bit about sort of the trading ecosystem. But the biggest and most important thing is if you want to buy and pick up property deals to trade, it all starts with motivated sellers. Okay. And what you want to try and do is you want to try and build a pipeline of property deals. And by doing that, you're going to have to try and find motivated sellers to buy your properties from. Okay. So talking about motivation, typically when people think about buying a property and buying a discounted property, people think it's great negotiation skills. And the reality is you might have good negotiation skills, but it doesn't necessarily mean that you need to be the best negotiator. Negotiation is all about timing and motivation. If you hit both of them head on, you will get a deal done regardless. And that's really, really key. So for me, when I'm dealing with any motivated vendor, the first thing I always ask is, why are you selling? Okay, really important to establish before you look at the property, before you look at the address, before you look at anything, why is that person selling that property? Because if you know straight away the reason for the sale, straight away you'll be able to understand, okay, well, what is that motivation that's going to then basically be able to create that equity for you to buy that property? Now that conversation might start off with, oh, well, I'm just fishing to see what I can get for my property. Okay, very little to no motivation at all. That's probably the bottom of my list in terms of people I'd want to speak to and try and progress that conversation further. If the conversation is, well, I've just had a family member pass away, unfortunately, I've inherited this property, it's been in probate for 18 months, I've already spent the money, so I really could do with selling this yesterday, that's a ding, ding, ding. That is one property deal you want to be closing. That is your priority at that moment in time. Okay. Now that's when we come to talk about death and inheritance. Another one is debt. So there's quite a few people that might have taken on different mortgages, different loans, and for whatever reason, can't sell the property, can't finance that. And they're going to need to sell the property. So they're either being forced to sell the property by a bank, for example, or it might be a receivership sale, where they've taken over the basic of the property, they need to sell it. And basically that vendor has gone into receivership or bankruptcy. It could be divorce. So again, when you're thinking about motivation, put yourself in the seller's shoes, okay? Hopefully none of you need to be or have been motivated sellers, but a lot of us don't need to be motivated sellers. But if you did think about a situation where you had to be a motivated seller, i.e. you're going through divorce, you've done all your paperwork, you've gone through court, and you have to sell your assets now, you have to split your assets up. You've had your property on the market because the agent has overpriced it by 30, 40,000. You've had it on the market for God knows how many months now, not sold. You might have had a buyer that's fallen through. You don't have many options at that stage. And you're not thinking about, okay, I want to get the maximum out of this property. You're thinking, I just need to get this property gone. Okay. That's the kind of mindset you need to be thinking about in order for you to be able to understand how to get the motivated vendors and then the discounted deals. And deadlines, simply, we've had a property where we negotiated it £100,000 under its value. And the reason was there was a £200,000 stamp duty bill that was going to get paid. They bought a main residence and they bought a second property, and then they sold the main residence and then kept the second property. And it was a couple of £1 million property, and it was a huge stamp duty bill that they were going to basically be liable for. I think it's within 36 months of buying 2 properties. So basically for them taking £100,000 hit in order for them to save £200,000 was probably worthwhile. So you need to understand there is deadlines that creates motivation. And there are a lot of people nowadays that want discrete sales. So one reason or other, they've had a dispute with the next door neighbor. They don't want their next door neighbor to know that they're going to sell the house, want a discrete sale. They have a tenant in the property and they don't want to upset the tenant or whatever reason, piss the tenant off and have them stop paying the rent. They want a discrete sale. There's a lot of reasons why people want discrete sales. And again, that creates motivation. They don't put it into the portals. They don't put it with an agent. So generally speaking, these are the 5 Ds that define motivated sellers and allows you to be able to basically get discounted deals.
Hi, I'm Michael Allison. I'm the Commercial Director at Roma Finance. We're proud to be in partnership with Property Auction Hunters. I'm also pleased to say we've recently launched our Roma Pro range, which enables people to use our term finance for that long-term property income. If you want to know more about it, please see the link below.
Okay, so talking about deal flow for a second, there is not one right or wrong way for you to be able to build your deal flow and build your pipeline. Your pipeline is super, super important. It is the lifeline of your business if you are a property trader. Okay, it's all about deal flow, all about building the pipeline. So generally speaking, these are the few ways for you to be able to build your pipeline if that's something that you want to do. And this is obviously what we go on to further in the training academy, but I'll give you the general idea of what it is. So you've got the digital build of the pipeline. Okay, so that's where you do maybe pay-per-click, SEO, social ads. So people are going into Google and saying, I want to sell my house quickly because I've got divorced or inherited a property or whatever. And that's where obviously you're getting deliberate people wanting to actually find you via Google. You've got SEO, which is, I'm not going to go into too much detail today, but SEO is more search engine optimization, where basically you write blog posts, you try and rank, you do backlinks, etc. And you basically try and compete with others to try and get to the top of Google organically without being paid. And then obviously you've got Meta and social ads, YouTube, etc. So that's the digital side of things. Very scalable, but very expensive, but you get some of the best leads through there. You've got the non-digital side of things, networking, referrals, direct mail. A lot of people have seen bandit boards, leaflets, things like that. Also very effective, not as easy to scale, but very, very effective, especially if you're starting out and you don't have massive budgets. And third parties, simply agents, sources, auctions, open market, you name it. Anywhere you can find properties, anywhere you can find deals, you can basically try and pick stuff up with motivated sellers. Probably harder. So you need to obviously go through more properties to get to that one motivation. But it is all still possible. And me personally, I do all of the above. So every single one is something that I will still work on and target. It makes no difference to me where I get the deal from. Just really important to be able to get the deal done in the first place. Okay. Cool. So that's kind of talking about the deal flow side of things. The other side of this presentation is about auction arbitrage. Okay. Effectively, what you're trying to achieve with auction arbitrage is you're trying to look at market inefficiencies, i.e. you're trying to buy a property at auction quite low. You want to sell it for a lot more, whether it's the same auction, a different auction, but effectively you're buying something at auction and selling something at auction, the same exact thing. In order for you to do that and have that profit margin, it's all about trying to find inefficiencies, okay? And what you're trying to create at auction arbitrage is fast profits. You don't want any, obviously, refurbs, and you want to be as capital efficient as possible. So you want to be able to get money out and money in as quickly as you can. And there's different ways of working auction arbitrage. You can do it based on you buying the property and selling the property. There's also other ways you can structure the deals a lot more creatively, which some of you really talk about as well, in order for you to basically limit stamp duty, limit the amount of cash you have to deploy into them. But for the purposes of today, we are just talking about buying and selling a property through auction as arbitrage. Okay, so auctions create opportunities, okay? And if anyone that's seen auctions, whether it's property auctions or any other auction at all, it's a fast process. People need to be able to be committed to the process. You want to be able to commit to buying something at auction, but also the sellers need to commit to selling something at auction at the same time. And as a result of this commitment, it creates environments where there is time pressure, okay? There's time pressure on the sellers, and there's also time pressure on the buyers. Typically, you get better deals done in auction. And there is limited market exposure versus open market because you've got a much shorter time period that you market the property within. You've got mispricing. And then obviously, as a result of the timing issue, that's where the mispricing becomes quite apparent. And you get a lot of different buyers. You get professional buyers, you get the general public buying. And as a result of all of this, it creates different prices for the same product. Okay, that's what arbitrage is about. That's the nature of arbitrage, is the same product being sold in multiple different locations, timings, etc., but being sold for different prices. And that is as a result of those factors there. That's what auction creates. It creates opportunities for people, and it creates a really good trading environment. If you want to trade, it is a great environment for you to be able to trade in, buy and sell, that is. Okay, so I suppose looking at auction arbitrage from a buyer's point of view, what is it that you want to be able to buy? Okay, so this is really, really important. You've got to understand that there's different scenarios that creates the arbitrage opportunity and the mismarketed opportunity. So number one, we talk about poor marketing. I'm going to go into an example and a case study today where there was poor marketing. And that could be for a variety of reasons. That could be limited photos, for example, not many photos. There could be no photos internally whatsoever. It could be as a result of no access to the property. Various reasons why you would have poor marketing. But if you don't know what you're actually buying, how are you going to be prepared to pay the maximum amount you would be willing to pay for that property? Okay, just think about that. If you don't know what you are buying, why and how would you be prepared to pay the highest amount you would be willing to pay for that property? So that's the first thing, is poor marketing. Second thing is timing issues. Okay, so it's really, really important to understand there's times in the year where there is an active market and there's times in the year where there's an inactive market. Now, that could be timing like right now. We are sat on the bank holiday in August. So it's summertime, everyone's on holiday, it's a bank holiday. It could be a good week for you to pick up properties this week. And it's probably not the best week for sellers to sell properties this week either, because typically most people are away. Okay. And that means that there's less people that will be interested in buying properties. People can't be bothered to take on all of the responsibility of reading a legal pack, viewing a property, etc., etc. And as a result of that, it also creates an opportunity, which is a timing issue. You can buy in one time, you can sell it another time and make a profit margin from that. That is a perfect auction arbitrage scenario. And third thing, location misconceptions. So some people, for some reason, for whatever reason, have a misconception about certain areas or certain locations. And that can put people off buying pretty good properties in what could have been a bad area that is now a lot better, or in better areas than they thought they were going to be. And as a result of that, again, it creates mispricing. So the local people might be more knowledgeable of that than people living outside of those areas. And that creates arbitrage opportunities, and especially where it's, I don't know, for example, the Northeast versus London, as an example. Wrong auction. So there's been a lot of times properties have been put into the wrong auction. Now that could be a property that's quite local and regional put into a national auction, or vice versa. A property that is maybe down in central London or London that is put into a more regional auction for any reason. And that could be as a result of various things, because of relationships with the auctioneers. They might have had a relationship with the vendor over the years. They've sold properties through them. They had a property in a different area, and they just so happened to approach them again to say, can you sell this property for me? Not thinking, is this the right auction? Just thinking, I know this person, I've got a good relationship with them, let me get them to sell it. And I know we're talking about profitable deals, but high guide prices create good opportunities. Usually when there's a high guide price, the properties have less interest in them. They have less people asking about, reading the legal packs, viewing them, etc. And typically those are the properties that go unsold. They might go unsold a few times, and then that creates an opportunity for you to be able to go in and maybe get post-auction deal done. Okay, so all of that talk, I've just wanted to show you guys one case study, and some of you might have seen this case study before, but it's one that I thought would showcase auction arbitrage really, really well. Okay, and that's why I wanted to use it for today's purposes. So this was a property being sold in Nottinghamshire, Nottingham, Pinxton. And it was I think it was a 3-bed or 4-bed semi, can't remember exactly. It was on a pretty large plot. And the vendor that was selling this property, so remember we talked about motivation. The vendor that was selling this property, their motivation was the fact that they had got repossessed. And I'm not going to go into the exact details for today's purposes of why they got repossessed and how it went about, but that's quite an interesting story in itself. And if you ever speak to me at any point in the future, ask me about that and I'll tell you about that story. But that vendor got repossessed. They had a bridging loan on the property. They were going to be developing it and they got repossessed. That vendor was a litigation solicitor, and they went through litigation with the lender, the solicitors, all sorts of issues. This property was legally quite a complex property to be able to buy, so it had all sorts of legal complexities around it. It had no viewings internally, no internal access. So the very, very limited amount of buyers that were interested in this property, okay, it went up with a guide price of £150,000. Remember when I talked about high guide prices? In my opinion, that guide price was probably too high for where it was. But as it was receivers selling it, they have to be able to, they're not going to take a risk. They have to be able to set things realistically as to where they want it. This receiver, interestingly, needed this property off their books as quickly as possible due to the legal complexities going on in the background on this one. So they spoke to the auctioneer once it went unsold and said, get me a post-auction offer, okay? Can you please go to your regular buyers or anyone else that was interested in the property, maybe read the legal pack, etc., and can you get me a post-auction offer done on this property? And I had this property brought to me, and they said, can you please make a decision? We had no more than 10, 15 minutes to read all the documents, read the legal pack, and commit to buying this property. Now, as a buyer, really important, you need to be able to commit. What you don't want to do is hesitate. What you want to be able to do is say, at which price does this property make sense for me to buy? Okay. What you don't want to think is too much going on in this property. I don't want it. I'm not interested. What you want to think is, what price does this property work for me at? Okay. And that's where knowledge, experience, and obviously understanding will come in as time goes on with property trading. Now, for me personally, that risk was at 125,000. So I was willing to take the risk of buying this property at 125,000 pounds. And that's the price that we paid for it. We did a deal post-auction on this property. Now, remember everything that I've just said in this whole presentation. It's all about arbitrage. And arbitrage in this property specifically was all about the marketing side of things. So what do? We marketed a lot better. Look at this property. Look at how it was marketed previously. Okay. And look at how we marketed it. We marketed it as a development opportunity. Okay. Now look at how that, sorry, this was a detached house, not a semi. I think I said semi originally. But look at that. That you can actually showcase. This was a aerial footage done with a red outline showcasing exactly what was being sold so people could see it. But I think the biggest thing, not only just that, the biggest thing was the fact that there was internal viewings being allowed. As we had bought the property, we were allowing internal viewings, whereas before there were no internal viewings that were allowed at the property. So we allowed internal viewings. That property sold for 187,000. Okay. So £150,000 guide price went unsold, £125,000 post-auction deal, and we sold it for 187. Right. So we bought it for 125, sold it for 187. We obviously had costs as well in there. We didn't do any refurbs. 2 months, £60,000 profit margin. All right. So that's what we did. That's an actual case study, so you can see from a auction arbitrage. Thank you for watching. Hopefully that's given you a clear understanding on how property trading works, and specifically auction arbitrage, where you're buying and selling from one auction and selling into another. I hope this is going to allow you and help you to take property trading further. If you are interested in property trading, we have launched the Property Trading Academy. It's a 6-month program specifically aimed at giving you the education, the hand-holding, plus, and what's most important is the accountability, the network, and the funds in order for you to be able to trade properties. If you're interested in this, book in a call with us or click the link below here, and I'll look forward to seeing you all in the Property Trading Academy.